What if just $1,200 could become $120,000? It may sound impossible, but history has shown that long-term investing, patience, and compound growth can turn small investments into significant wealth. The key isn't finding a secret stock or getting lucky. It's investing consistently, staying disciplined, and giving your money time to grow. Most people spend their money on things that lose value. Wealthy people invest in assets that have the potential to grow over time. Instead of chasing quick profits, they focus on long-term strategies like diversified investments, regular contributions, and avoiding emotional decisions during market ups and downs. There are no guaranteed returns and every investment carries risk. But by learning the basics of investing, staying consistent, and thinking long-term, you can greatly improve your chances of building wealth. In this video, you'll discover the principles that successful investors use to grow their money over the years and how you can apply those same ideas to your own financial journey. Part 2. The power of consistent investing. Let's say you invest your first $1,200 today. It may not seem like much, but every great fortune starts with a single investment. The real secret is not the amount you begin with, it's the habit of investing consistently. Imagine adding just $100 to $300 every month to a diversified portfolio. Over time, your investments can begin generating returns, and those returns may generate even more returns. This is the power of compound growth. Many beginners make one big mistake. They try to time the market. They wait for the perfect moment to invest. The truth is, no one can consistently predict market highs and lows. Successful investors focus on time in the market, not timing the market. Market crashes will happen, recessions will come, prices will rise and fall. Instead of panicking, experienced investors often stay invested and continue buying regularly. Historically, patience has rewarded disciplined long-term investors, although future returns are never guaranteed. The goal isn't to get rich in a few months. The goal is to build wealth over many years through smart decisions, consistency, and patience. Small investments made regularly can grow into something much larger than most people imagine. Part 3. Invest smarter, not harder. One of the biggest mistakes beginners make is putting all their money into a single stock, hoping it will make them rich. While that can lead to big gains, it can also lead to big losses. Instead, many successful investors choose diversification. This means spreading investments across many companies and industries rather than relying on just one. Diversification helps reduce risk because if one investment performs poorly, others may perform better. Many long-term investors use index funds or ETFs because they provide exposure to hundreds of companies in a single investment. Instead of trying to pick the next winning stock, they invest in the overall market and allow time to do the heavy lifting. Another important habit is to reinvest your earnings. When dividends or investment gains are reinvested instead of spent, your portfolio has the opportunity to grow even faster through compounding. Remember, wealth isn't built by making one perfect investment. It's built by making smart decisions repeatedly, avoiding emotional mistakes, and staying committed to your long-term goals. The investors who succeed are usually not the smartest. They're the most patient. They stay focused during market ups and downs and continue investing year after year. Part 4. The habits that build. Real building wealth is not just about investing. It's about developing the right financial habits. Many high net worth individuals follow simple habits consistently for years, and that's what sets them apart. The first habit is living below your means. Just because your income increases doesn't mean your spending should. Wealthy people often save and invest the difference instead of upgrading their lifestyle every time they earn more. The second habit is paying yourself first. Before spending money on entertainment or shopping, set aside a portion of your income for investing. Even small, consistent contributions can make a meaningful difference over time. The third habit is avoiding high-interest debt. Credit card debt with high interest rates can slow your financial progress. Paying down expensive debt while investing wisely can improve your long-term financial position. Finally, keep learning. Read books, follow trusted financial educators, and stay informed. Financial knowledge is one of the few investments that can continue paying off throughout your life. Remember, real wealth is rarely built overnight. It's built through discipline, patience, and smart financial decisions repeated over many years. Part 5. Your long-term wealth action plan. Now you know the truth. Building wealth isn't about luck. It's about making smart financial decisions consistently over time. Start by investing your first $1,200 instead of letting it sit idle. Then commit to adding money every month, even if it's only $100 or $200. Consistency matters more than trying to invest large amounts all at once. Build an emergency fund before taking unnecessary investment risks. Diversify your investments instead of relying on a single company or trend. Stay patient during market downturns and avoid making emotional decisions based on fear or excitement. Remember, every investment involves risk, and no strategy can guarantee profits. But history has shown that disciplined, long-term investing has helped many people grow their wealth over time. The biggest mistake isn't starting with a small amount. It's never starting at all. Time is one of your greatest financial assets, and every year you wait is a year of potential compound growth that you lose. Imagine looking back 20 or 30 years from now. The small decisions you make today could become the foundation of your future financial freedom. Your journey doesn't begin when you become rich. It begins the moment you decide to invest in your future. If you found this video valuable, remember to like, subscribe, and share it with someone who wants to build lasting wealth. Your future self will thank you for the decision you make today.